And this is one of the things that could be pressuring stocks, although in which direction is debatable. China's economic growth slumping to its slowest pace in almost 3 decades, weakened by the year-long trade war with the U.S. President Trump tweeted about this morning. China's second quarter growth, he said, is the slowest it has been in more than 27 years. The United States tariffs are having a major effect on companies wanting to leave China for non-tariffed countries. This is why China wants to make a deal. Let's discuss this. We're joined by today's panel. Yahoo Finance's Editor-in-Chief Andy Serwer and Brian Sazi is with us as well. So, Andy, it looks like that the tariffs were a factor, but not the single factor that is causing a growth slowdown in China.
It's so tricky, Julie, just to respond to your inference or your implication, I should say, which is that it's hard to parse.
Yeah.
And there's no control of the experiment. So in other words, we don't have the Chinese economy over here without a trade war to compare it to. I think it's safe to say it's taking a toll. How much? Hard to say. Of course, we'd take 6.2% growth in a heartbeat. And I think the Chinese, of course, always have remedies that we don't have. It is a state-controlled economy. For instance, they can do a lot more infrastructure projects that are internally focused. And I think you're going to see Beijing respond that way.
Well, they are doing that. But let's take a step back, because we're talking about a global player in the world economy that is, they're cutting taxes. That doesn't seem to be spurring the economy, and they're lowering lending standards. And this was something that was very important over the last 2 years. They've been increasing the lending standards to avoid the bubble that could be their real estate market popping. That would have dire ramifications for all of us, wouldn't it?
It would, but I think what you're learning about China is just the economy's in a different gear, and I keep looking it through the lens of companies, Adam. You know, I'm worried about what Apple puts up here. I'm worried about what Starbucks puts up here. I'm worried about what newly minted IPO Luckin Coffee comes out and delivers for their first quarter as a public company because of the slowdown in China.
Well, and kind of to your point here, when you have the president tweeting and sort of celebrating a slowdown in China, I think a lot of economists would argue that that is misplaced.
It's a little silly, but, you know, shocking, right? I think this idea that Adam had, that there's potentially, really negative implications with lowering lending standards, is a very good point. I mean, because the potential hidden bubble in the economy, of course, is banking and housing. And, I think those are real problems. I would focus, if I were them, far be it from me, again, on this infrastructure stuff, the Belt and Road, of course, which is just something they can build for the next 50 years. I mean, it's massive. And then also, what they did during 2008, 2009 was spurring consumer consumption by giving people rebates on white goods, for instance. Actually like making refrigerators and washing machines cheaper, giving people coupons, and that helped them avoid the worst of the Great Recession.
But in this report, consumer spending there actually held up. But if they cheapen the renminbi, that has negative implications not only for China, but then for us.
Yeah, it does. This is welcome to the world of economics 101.
Yeah,
if you're running a central bank or
if you're the president threatening a currency war.
Yeah, because when you do one thing and there's an implication that happens negatively on the other side. So it's not lost on them. I mean, remember the thing about China. The most important thing for Xi Jinping is employment. Keeping people employed, because what you cannot have in that country is civil unrest. I mean, in the same way that you can have it here. Here you have, 500,000 people marching on Washington. We yawn. It doesn't mean, it's a big deal, but it doesn't mean anything. There, like for instance, what's going on in Hong Kong, that's very dangerous stuff for the Chinese system. And I think everyone needs to remember that.